Hello class, let's review the last two rounds of the simulation. So we left off in round 2 and you just completed round 3 and 4. And I can see here net profits per team that we had a new leader in round 3, odd, and then also continued leadership in round 4 of net profits with being the first to break the $160 million barrier. Now, if you're over 100 million, you're doing very well, and most teams are over 100 million. If you're down here and you're not even over 60 million, you should look at the teams. These teams here are over 100 million, and we have a number of them here over 100 million. And in the industry page of the simulation, you can go and see how did they put their cars together, how much did they spend on advertising, what points were they getting, what are their ratios. So you need to do a little industry espionage and figure out, what are the successful companies doing and try to emulate them a little bit more. And this happens in the auto industry all the time. When Toyota and Honda were doing very well, GM and Ford and Chrysler came to Japan, viewed their manufacturing facilities, looked at what they were doing, and started incorporating their secrets into their companies, their successes into their companies. And then when Chrysler and GM and Ford were doing well, the Japanese auto manufacturers came over and looked at their new designs and models. So, it's these auto companies very open about what they're doing and their successes and their innovations. And all these companies are public, and you can see all the records of their financials and go to any dealership and see how these cars are being put together. But anyway, what the good news is seems like everybody's been able to increase their profits as we move along. So that's the name of the game, and that's what finance is all about, is maximizing shareholders' wealth. And how do you maximize shareholders' wealth? You increase net profits per team. Okay, moving into points per team, we see that, remember, 400 points is where we're trying to be. And, I explained that round 1 is very easy to earn points because you're coming off a horrible performance from the previous management that was fired and you replace them. And in round 2, teams did very well. In round 3, we have a lot of teams breaking the 400-point barrier, and some teams even breaking 500 and 600-point barrier. And in round 4, again, we have teams close to, and some teams passing the $400 barrier. Now, round 4 is usually the hardest round to make the most points because it's right in the middle of the simulation, and this is the turnaround round when you start to pay down debt, buy back stock, and start to increase your asset purchases. So it is a hard round to make a lot of points, but teams by and large have done pretty well. Now, if you look at stock price per team, we have the highest stock price in round 3 was about $60 per share, and now we're up to $96 per share. So we have, by and large, the same two companies in first and second place. 90 Auto and Odd are in first and second place, the new leaders of the stock price, followed by Team Hay and Stony Inc. and Deja Autos rounding out the top 5 of stock price, which means you're keeping your investors very happy. You're raising profits. You're making investments in their company. You're increasing sales. Speaking of sales, we can see that we have in round 2, Deja Autos was number 1 in sales. We have a new number 1 into Team Field, and let's see, Team Field in number 1 and Caulfield in number 2 of total sales. And we had some companies here. This company made a huge rebound in sales in year 4, as did this blue company here. I don't think I can pinpoint them, just they're in the mix there somewhere. But these teams are doing very well. If your sales are anywhere from 580 million to 661 million, you're doing very well. These teams down here, you've made improvements, but the two bottom teams down here really have to look at what are the other teams doing, how are they forecasting, how are they advertising, and why are you so far behind in your sales? You really should look at that and see if you can get that to increase. All right, and earnings per share, and we have a clear breakaway. Odd is the clear breakaway in earnings per share. That means they are the best at maximizing shareholders' wealth, because earnings per share is the clearest representation of how much wealth you're earning per share of stock, and they are doing everything right. They're increasing their profit margins. They're investing in their company. They're building their cars efficiently. They're advertising effectively, but not over advertising. So they are doing very well in profits. And we have 90 Autos number 2, Sony Inc. and Deja Autos, followed by J Auto and Team Field and Team Hay are all doing well in earnings per share. It looks like only one team here had declined in earnings per share. That should really be looked at. Actually 2 teams declined in earnings per share. So that should be really looked at and thought about. So how do you increase earnings per share? You increase profits, decrease the amount of outstanding shares. These are things that we were learning in finance. We're learning these things when we look at the financial ratios and the stuff that we're doing in the class itself. Okay, so let's go to the leaderboard. And we see that, just like I said, most teams are, a few teams in round 4 have gotten over the 400 points. Most teams are 200 to 300 points. Profit margins, now we have the top teams here at 60%. And that's what everybody should be striving for. As you go into round 5, you should be striving for 60% or better profit margins. Only one company is at 52%, and the rest of the companies are still in the 40% range. So you need to get out of this 40% range and move into the high 50% by the 5th round. So 5th round you're shooting for high 50%, even 60%, and the 6th rounds you want to be in the 60% high and even the 70% area as best you can. Because you really got to get those profit margins up. How do you get gross profit margins up? You reduce costs, you increase prices. How do you reduce costs? You buy operational cost reductions, and you lower the amount of features on your car to reduce your cost, and then you raise the prices on the car to get higher profit margins. Even if it means sacrificing some sales, you rather maximize profits than sales. That's how companies work. Okay, so stock price, again, we talked about that on the screen. Big change in stock price. Return on equity. So the equity is, as you should know from studying the ratios, equity is the amount of money that you own in an asset. So if you bought a car that's a $20,000 car and you put $5,000 down on that car and borrowed the rest, your equity would be $5,000, the money you put on the car. So the money that investors have in the company in relationship to their earnings is return on equity. And this should be above 30%. So we have a number of companies above 30%, but some companies below. So you should focus on increasing that. Total points, okay, so we're looking to get 2,500 points for the class. And we have here one team is very close. Actually, we have a number of teams at 2,000. I mean, they just have to make, let's see, they only have to make less than 500 points or 250 points or or less per round to get the full point for the simulation. And there's a number of teams still pretty close to 2,000 that are in the mix. Even if you're at 1,500, you still could pull out 2 500-point rounds easily and make the A in the simulation. So there's really only 3 companies back here that are in danger of not getting the A for the simulation. They really have to turn things around and quickly. Okay. Operating profit margins, again, this is if you over advertise and you have excess demand you're not utilizing, you're wasting your advertising money and you're driving down your operating profit margins. So you have to be aware of that. And this is why you have to increase your profits and sales a good deal to make up for the fact that the industry is demanding more and more advertising to keep competitive. As the industry grows, advertising spending grows. Earnings per share. A little trick here is buy back your stock. That will help all your per share variables to improve. And return on assets looks at your asset utilization. So if you're buying factories and not using them, or buying factories to make just 100 cars, you're putting on a big asset in your company, and you look at the profits in relationship to the assets is going to suffer. So you want your assets to be efficient. You want to have a high capacity utilization on your production plants. That means if you build a production plant, you have a capacity of $1,000 for a new production plant. You want to make sure you're using at least 800, building 800 cars out of that plant or more to get the maximum return on that asset. So this looks at how effectively your assets that you invested in the company compare. Now, if you have a lot of excess inventory that's going to reduce this number. So you want to make sure your forecasts are accurate. Okay, net profit margin again here. If you have a lot of debt outstanding, now's the time to start buying that debt back, and this will improve your net profit margins. And your net profit margin should be over 25% at this point, at least 20%. So a lot of companies are still below on that. Revenues per share, of course, we don't want to miss any sales. If you have the do proper advertising, proper forecasting, you should be significantly. The sales grow according to the student user manual. And we'll pull it up in a second. Let's pull it up now. So let's get the student user manual and look at how fast. I want to see how fast the industry is growing per round. And I know it's double digits. So if the industry is growing at double digits, so let's see. Yeah, here. 25%, 30%, 20%, 35%. This is how, so your sales should be growing at least 30% a round. That's, I think, about the average here. Close to 30% per round. So if you're not using, they have tips here in the user guide. They give you the growth rates. They give you a suggested forecast. So if you're not using the student user guide, that could be a reason why you're not doing well in the simulation. Okay, so let's just move back up to, so that's revenues per share. Total asset turnover is how you turn your assets into sales. So if you have $1 million asset and 10 million in sales, your total asset turnover will be 10. So a company here, this would be like having 100 million in assets and 269 million in sales. So it just looks at how you turn your assets into sales, and you want your assets to generate more and more sales. So another look at efficiency in the company. Okay, so let's look at my demo. Let's see where I'm at in the simulation. Okay, I'm in round 3. I'm going to finish the demo from round 3 and go into round 4. And you're in round 5 now, but I just want to show you some things I would do if I'm doing a round. I look at my year-over-year change. So I did get my sales up close to the average. I did better on my debt ratios, and I improved my profit margins. So that trickled down. My return on equity was good. My return on assets were good. Market capitalization, and I had a surplus, and I made investments in the company, and my forecasting was mostly accurate, except I lost points on economy, was weak. So that's the first thing I would look over. My ratios, get an idea of my overview points, how I did, and I made 700 points in round 3. Then I would check out my assessment and see here my revenue is low, and some things I can do for my revenue. Then I would look at the chart, specifically my performance chart, and I will look down here to see, okay, truck and luxury, this is where I did terrible. So when I'm forecasting, I got to think about that more. All right, so I'm going to go back into industry. I'll check out my competitors, see what they did, and see how I'm comparing. Then I go back into sales. And maybe the first thing I do in sales is I go to the user guide over here, and I say, okay, I'm going into round 4. So it looks like 42, 57, 3, and 41. So that gives me an idea of where my forecast could be. So I'm going to kind of base my forecast. I mean, it's not going to be exact, but I'm going to kind of use this as a guide. Why not? It's there. So I'm going to kind of put this in as a guide of what my forecast should be. And then I have a nice amount of cost reduction, so that's going to help. So I'm going to build my car and try to beat last round's profit margin. So I have, what do I have, 51% here? So let me go back. What was my profit margin? 58. Okay, so I'm not beating it. So this is going to be bad for my investors. So I'm going to have to make some changes to try and get that number to be a little bit better. Okay, 58. So I guess I could just about match it. I need more operational cost reductions. That's definitely a problem here. So Let me put in. I'm just throwing in. Don't copy my variables here because I'm not even thinking about it. I'm just throwing numbers in. It's not really the most effective way to do it. Okay. And again, I got to 58. Which isn't great here. There's not much more I can trim here. Okay, I got to 61, which is a little bit of an improvement. But still, I'm having a hard time making those improvements because I didn't do enough operational cost reduction investments, and that is hurting me. And I can't really meet the customer expectations, so that's going to hurt me in sales as well. So it looks like it's difficult for me to make the. Here, so get this a little bit above 58. I want to try to at least get a little bit above last year's. And, it's difficult because I didn't do enough. I don't have enough operational cost reductions to really get me there. But I think on average, I'll be at 60%. So I'll be a little bit improved over last year. And that's what these reflective observations, you don't have to fill these in, but you should at least read them and think about them because they do help you to focus. Okay, so I see that the amount spending in this area has gone up, so this takes a while to do this. And again, I need to go to the student user manual and look at how effective the effectiveness is and put that into dollar terms when I fill out the industry. It's going to take a few minutes. So I'm going to put this on pause while I fill this out, and then we'll move into production. Okay, so now I'm in production, and my capacity is at 3,000. And I am going to have to buy a lot of factories now because I under forecasted my sales. So now I'm going to have to invest a lot of money, which is going to put pressure on my assets, my total asset turnover, my return on assets, because I'm going to put a lot of money into assets this round to try to get to back up to where my sales should be. And I completely underinvested here, so I'm gonna double my investments in my operational investments. That'll earn me 100 points just by doubling, but it'll get me a better chance to make get me into a better chance to get into the next profit margin next round. Okay, so let me just go down here, and I see that I have $58 million in profits, and I'm going to use some of that to retire debt to help my debt numbers and stock. Let me retire some stock. I guess there's a limit on how much I can retire, which makes sense. You can't just go and retire too much. Okay. So now is the moment of truth. Let me process round 3 going into round 4, and I'll be up to date where everybody else is and see how I did with my suggestions on how you should run the simulation. And I wound up making only 200 points. So similar to what the class did because it's difficult in the round. So let's figure out what I did wrong. Now, I'm glad I didn't do great because it gives me a chance to look at my errors here. Okay, problem number 1. Okay, I did great in the revenues. I really bounced back in the revenues, and I did good with my debt ratios because I paid down debt. But my profit margin only went up a little bit, so I didn't make a lot of points by it because I'm at the 60% level, but I really didn't come up much improvement from last year. Just a little bit of improvement, and my total asset turnover suffered because I greatly increased my assets, which also hurt my return on assets because I bought so many assets in round 4, and that's what happens to a lot of teams. We really build up on the assets in round 4, so that made things a little bit difficult, squeeze my points a bit. My market capitalization was good. My book value went up, but my forecasting was a little weak. So my forecasting was really got killed here because I over forecasted, which led to an unexpected deficit. So how do I know? If I go into my production, I see that I had a lot of cars unsold. So I think the problem is I was looking at year 4. Oh, I was looking at I was putting in year 4 sales forecast. I should have been putting in year 3 because I was in year 3. I was doing year 3. I put the wrong year's worth of forecasting information in. I should have put in, I guess it starts year 3. I got to put this in, and then I'm now in year 4. So I jumped a year in the forecast, so that makes sense that why I did so poorly on my forecasting. Okay. Whoops. So that's a mistake. And then that wound up creating this unexpected deficit that, I had in my here. This deficit, $54 million in deficit, is because I over forecasted and I over produced. So, okay, so like a lot of you, I only made 200 points in round 4. So I've over projected my sales, I over invested in assets, and so now going into round 5, the good thing is I doubled my operational cost reduction. So let's see if this helps me to. Yes, I am getting higher profit margins. And I see the customer expectations that go up every round here. So all right. And again, I guess I got to do some tweaking here to get this in it. It's it looks like it is hard to get above that 60. I'm at 62%. So again, I'm struggling. I should have made even more operational cost reductions. I'm thinking. Okay, so it's, again, another flaw I made here is I should have invested more in my operational cost reductions, because as the customer expectations are going up, it's getting harder and harder for me to beat my customer expectations. All right. So it looks like I'm only able to I'm trying to get above 63 on all the cars to make a small improvement. Excuse me. But it's clear to me that I'm going to have to make a lot more operational cost reductions in round 5 here if I want to finish the simulation off more successfully. Okay. So I'll put in but now my forecasting will be a little bit better because I've, so I gotta do my advertising. So one benefit this round is I should bounce back on my assets because I have a lot of leftover inventory I can resell. I don't have to buy any production plants. So that's going to help me a great deal on reducing the growth of my assets. But I am going to double my operational investments again to get me higher, get me 100 points in my operational investments, and finally maybe I could improve my profit margins in the final round. So, okay. So I'm down here and I have a $49 million profit. So I'm going to pay down some debt and some stock. Okay. Now let's see how I do in this round. So now, okay, so that's round 4. I'm in round 5, and I made 500 points. So how did I improve my score? I did get my profit margin up a little bit, but at 64%, and I did reduce, I guess, on operational net because I had to invest, I had to advertise more, and I had I wasn't able to really reduce my debts as much. Though I did make points, like I said, my total asset turnover went up, my earnings per share went up, and my return on equity, return on assets went up, so I did well there. And my forecasts were a lot closer because now I'm using the proper year in the student user guide. So my forecast, so I earned a lot of points on my forecast. Plus my operational investments, I doubled that, and I had a surplus. So I made about 500 points. So I did much better in round 5. So now moving in, completing round 5, when I do the sales, I'm not going to do all of round 5, but when I do, excuse me, I have a lot more operational cost reduction. So when I do round, now I can get much higher profit margins. So now I'm hitting the 80% here. So going in, because I pumped up those operational cost reductions, I was really able to kick up my profit margin. Now here I'm at 73%. So yeah, so that's what I needed to. I really had to kick up my operational profit margins, and that helped a great deal to get my profit margins well above. And that's what I'm saying in round 5. Round 4 is a difficult round to do well, so round 5 is a lot easier for teams to do well. And again, 70%. So I've done well. And maybe I can get this up a little bit more. Okay, 70%. So it's a big leap over last round. And I'm trying to, let me see if I can get everything at least over 70%. And this is 80%. Well, this is fantastic on this one, 80%. Okay, so I have my new forecast in. So I do have to, maybe I will just finish this. I do have to buy a couple production plants, but not as much as in round 4. And I might as well at this point max out my operational cost reductions as best I can. So this is how you can really, start to do better. And then okay. So I'm going to have a huge surplus here, but that's okay. Let's see. Okay, so then about 500 points again, moving into round 6. And you see here, I did very well. My profit margins getting up above 70%. So I made, and my operation and net profit margins went up a great deal, which cascaded into all my per share variables. I got that close to 500 points. Okay, so there, I took a little bit extra time to kind of preview a couple of rounds. Now, I wouldn't exactly follow exactly what I did, but I just want to show you the process of you got to get those profits up to get those points up. And it's sometimes in the middle in round 4 and 5, or round 3 and 4 or 5. You could be a building year, and when you have a building year, it's hard to make the total amount of points. So if I look, I'm in year 6 here, my last year. So by my last year, I have accumulated 2,600 points. So even you see here in round 3, I had that lull. It was a building year. But I spent a lot of assets to build, and I'm getting the rewards moving forward. And so don't be discouraged of a year where you don't have over 500 points, because sometimes it's a building year. Okay, so I hope you found this half an hour video helpful, and try to encourage you to do better in the simulation. And remember, the keys are: look at your industry, what are your competitors doing, read over your assessments, review your overview points, read the student user's guide, watch my video, and this should all help you to do better. Okay, thanks for your time, and I'll do a final wrap-up video in the simulation after you complete rounds 5 and 6 next week. Thank you. Take care.